In this video, we're going to be looking at long-term contracts and recording revenue for long-term contracts using the percentage of completion method. We're going to be taking a look at an example that is a profitable contract. In this example, it says Salty Dog Marine Services Limited commenced a $25 million contract on January 1st, 2020 to construct an ocean-going freighter. The company expects the project will take 3 years to complete. The total estimated costs for the project are $20 million. Assume the following data for the completion of this project. They've given construction costs, estimated cost to complete the project, progress billings during the year, and cash collected during the year for 2020, 2021, and 2022. They want you to calculate the revenue recognized and the gross profit for each year, and we're going to be using the percentage of completion method. They also want you to record the journal entries, so we're going to look at the journal entries for every year as we recognize the revenue and as we bill the client as well as collect the cash during the year. Whenever you're working on a problem using the percentage of completion method, I recommend you set up a template like the one that I'm going to show you. So first, we are in the year 2020, so let's go ahead and have a column for 2020. And the first thing that I would like to start off is by listing our construction costs that were incurred during the year. What we're trying to find is construction costs incurred in 2020. In this question, they've given us construction costs incurred that are cumulative. Cumulative means every year it's adding up. So in 2020, 5 million, 2021 is 12 million. That includes 2020's numbers and 2021 numbers. In 2022, it's 20,100,000. So construction costs incurred in 2020 is easy because it is the first year of the contract. So we know that that is 5 million right away. It's a number that they have given in that first column. That's the first number that we look at. The next one that we're going to need is something called estimated cost to complete at the end of the year. Let me go ahead and make that column bigger. So estimated costs to complete. We've got 3 years as the estimated time to complete this project, and we're still at the end of 2020. So we've got 2 more years to go. How much do we estimate it's going to take to complete this project? Well, again, that's given in the question. The estimated cost to complete the project is 15 million. So I'm just going to enter 15 million here. The next thing I want to find out is the total estimated and actual construction cost, which is the total of these two numbers. Let me do a little bit of formatting. So it's a total here, and we're going to add the 5 million plus the 15 million. That is the total estimated and actual construction cost for 2020. That gives you 20 million. Let me make sure that this is not confused as a number. That's just a heading for the year. So now we've got the total estimated and actual construction costs at the end of 2020 to be 20 million. At this point, I can calculate the percentage of completion. Here's the formula to calculate percentage of completion. Percentage of completion is equal to cumulative actual construction cost to date divided by total estimated and actual construction costs. So how much are the cumulative actual construction costs to date? It says the construction costs incurred to date is 5 million. So in your numerator, you're going to have 5 million. So let me do the percentage here. In your numerator, you're going to have 5 million. And then denominator is total estimated and actual construction costs. Total estimated and actual construction costs we calculated to be equal to 20 million. So we divide that by 20 million and we convert that to a percentage by multiplying by 100, and you get 25% as the percentage of completion. Again, to calculate the percentage of completion, your numerator is cumulative actual construction costs to date. So construction costs incurred. Do you see here in this first line, the information they gave you is construction costs incurred, and it's cumulative, which means every year it's a total to date. That is your numerator, and the denominator is the total estimated and actual construction costs. Multiply that by 100 and you get 25% completion. The next line I want to calculate is something called revenue recognized to date. This can even be sometimes called cumulative revenue recognized to date or revenue recognized to date. So we are still in 2020, which is the first year. How much revenue will we recognize? We're going to recognize 25% of our total contract revenue. How much is our total revenue? The question said this is a $25 million contract. When we're done, we will get $25 million. In 2020, we're 25% complete. Therefore, we can recognize 25% of that 25 million. So to figure that out, I'm going to multiply 25% by 25 million total contract price. And that gives us revenue recognition to date of $6,250,000. Now, have we recognized any revenue previously? No, we haven't, because it's the first year of the contract. But I am going to add that line item because in future we are going to have to do something with revenue recognized previously. So when we come to 2021, we're going to have to subtract the $6,250,000 to figure out revenue in 2021. But for this year, revenue recognized to date is 25% of $6,250,000. Previous revenue recognized is 0. So revenue recognized for 2021. So we're going to call that revenue recognized in the current year is going to be equal to $6,250,000 minus whatever was recognized in the previous years, which is 0. So we're going to recognize $6,250,000 in 2020. That answered the first part that says calculate the revenue recognized. So in 2020, we will recognize $6,250,000. Then they want you to calculate the gross profit as well. You know that revenue minus costs or cost of goods sold would be gross profit. So in the case of a construction contract, it's construction costs incurred during the year. So we're going to subtract construction costs incurred during the year, which would be, for this year, it's going to be $5 million. That will give you gross profit. What we do is we subtract costs from revenue to come up with gross profit. So you're going to take $6,250,000 minus $5 million. Gross profit for the year is $1,250,000, and that is a final total. Now that we've done all the calculations, let's go through the journal entries for this year. The first thing we're going to record are the construction costs that the company incurs. So this is recorded in an account called Construction in Progress. It is an asset account, so it's similar to work in progress if you've done your managerial accounting classes, but construction in progress is going to be debited every time the company incurs construction costs. So during 2020, the company incurred $5 million of construction costs, so we're going to debit $5 million to this account. The credit goes to various accounts, so depending on whether they spent cash, accounts payable, whether it was for salaries, it would go to various. So I'm going to say various accounts and credit $5 million. And the only reason I did that is so that you can see that there's a debit and a respective credit, but the credit will go to different accounts. So that takes care of the construction cost. So that is one entry every year that you need to make for construction costs that were incurred during the year. Debit construction in progress, credit different accounts. The next entry we are going to do is progress billings during the year. This is when the company bills the customer for whatever work they have done. Now, this is agreed upon by contract. It has no correlation to revenue recognized. This is independent. Progress billings are typically agreed upon in the contract, and they will be always given in the question for you. So this says progress billings during the year were $4,500,000 during 2020. Whenever we, the company, bill the customer, we are going to debit accounts receivable. So accounts receivable gets debited for $4,500,000. And then the credit goes to an account called Billings on Construction Contract. This account has a normal credit balance, but we're going to debit accounts receivable. We're going to credit Billings on Construction Contract for $4,500,000. This is a permanent account, and as you can see later, we're going to be carrying this balance forward every year. That is your second entry. The third entry that you're going to do is when the customer pays you for what you billed, you're going to record that. So cash collected during the year is $4,200,000. So we're going to record that by decreasing accounts receivable. So we're going to credit accounts receivable $4,200,000 because we billed $4,500,000 and they paid us $4,200,000. And then, of course, we debit cash. Those are the three journal entries we do for recording construction cost, to record progress billing, and for cash collections. We have one more journal entry, and that is to recognize revenue during the year. We already calculated that during this year, we're going to recognize $6,250,000. That gets credited to an account called Revenue from Long-Term Contracts. So revenue from long-term contracts is $6,250,000. That is what we calculated to be 25% of the total $25 million contract. We credit revenue because revenue is increased by credits. We're going to debit an account called cost of construction. Think of it as cost of goods sold. So this is cost of construction. This is an expense account. We're going to debit the cost of construction during the year. Well, we know that $5 million is the construction cost that we incurred during the year. So we're going to debit $5 million. So it's still all part of the same journal entry. Yep, I have one too many zeros, so let me delete that. So we credited $6,250,000. We debited $500,000. We're off. Our total debits are not equal to total credits. We're off by the amount of gross profit of $1,250,000. and that goes on the debit side, we're going to put that in construction in progress. So in construction in progress, we're going to debit $1,250,000. That takes care of our journal entry. So to recognize revenue, it's a it's a compound entry, journal entry. You're going to debit construction in progress of $1,250,000, the amount of gross profit. You're going to debit cost of construction, $5 million, and then you're going to credit revenue recognized during the year of $6,250,000. Those are all the journal entries for 2020 relating to this construction contract. Now we're going to look at 2021 in the next video. Keep in mind, when we start 2021, all the permanent accounts will carry their balances forward, but the temporary accounts will reset to zero. So if you look at this set of T accounts, revenue is a temporary account. So next year when we start this question, revenue will have a zero balance because it would have gotten closed during the closing process. Cost of construction, similar to cost of goods sold, it's an expense account that would have also got closed during the closing process. But construction in progress, billings on construction contract, accounts receivable, and of course cash and some of the other accounts are permanent. They will have balances that carry forward from year to year. That's it for this video. Be sure to watch the next video to see how we record all these costs in 2021.